What are the top 5 investment strategies for beginners? For beginners, it's essential to start with investment strategies that are relatively simple and lower in risk. Here are 5 top investment strategies to consider. 1. Diversification through mutual funds or ETFs. Invest in mutual funds or exchange-traded funds, ETFs, that offer diversification across a range of assets like stocks, bonds, or real estate. Diversification helps spread risk, reducing the impact of poor performance from a single investment. 2. Dollar cost averaging. Invest a fixed amount of money at regular intervals, for example, monthly, regardless of market conditions. This strategy can help mitigate the impact of market volatility by buying more shares when prices are low and fewer shares when prices are high. 3. Long-term buy and hold. Invest in quality stocks or assets with a long-term perspective, typically over several years or even decades. This strategy leverages the power of compounding and can reduce the impact of short-term market fluctuations. 4. Robo Advisors. Consider using a Robo Advisor, which is an automated investment platform that creates and manages a diversified portfolio based on your risk tolerance and financial goals. Robo Advisors are user-friendly and require minimal investment knowledge. 5. Retirement accounts, 401k or IRA. Take advantage of tax-advantaged retirement accounts like a 401k or individual retirement account, IRA. Contribute regularly to these accounts, especially if your employer offers a 401k match, as it's essentially free money. Remember that all investments carry some level of risk, and it's crucial to align your investment strategy with your financial goals, risk tolerance, and time horizon. Additionally, consider educating yourself about the basics of investing or consult with a financial advisor to make informed decisions. Starting with a conservative approach and gradually increasing your investment knowledge can help you build a solid foundation for your investment journey.